A few days ago, Bloomberg reported that SpaceX is quietly pitching investors on an IPO valuation of over $2 trillion. To put that in perspective, that would make it more valuable than Tesla, Meta, and Berkshire Hathaway combined. The interesting part isn't the number itself, it's why the number is that high. Because when you look at the actual revenue, the actual profits, and the actual business, something doesn't quite add up. And that gap between what SpaceX earns and what it's being priced at is really what this story is about. SpaceX, you already know the name, the rocket company that made reusable boosters feel mundane, that strapped astronauts onto a capsule it designed from scratch, and that plastered the night sky with a constellation of internet satellites called Starlink. For years, it's been the most talked about company you couldn't actually invest in because Elon Musk kept it private, famously saying he wouldn't take it public until it had reached Mars. Mars is still a ways off, but apparently Wall Street is close enough. SpaceX filed confidentially with the SEC on April 1st, targeting a late May prospectus and an early June roadshow, and the number they're floating to investors is staggering. SpaceX has boosted its target IPO valuation above $2 trillion, according to people familiar with the matter, as the world's most valuable startup gears up to pitch what would potentially be the biggest market debut in history. $2 trillion. Let's zoom out for a second, because this story didn't start in April 2026. It started in 2002, when a 31-year-old Elon Musk, fresh off selling PayPal for $1.5 billion, decided to spend his own money trying to make humanity a multiplanetary species. He cold-called NASA engineers. He bought rocket components from Russian surplus dealers. He watched his first 3 rockets explode. By the time Falcon 1 finally reached orbit in 2008, SpaceX was days from bankruptcy. That company, the one that nearly died on launch pad number 4, is now being pitched to investors at a valuation larger than the GDP of France. The road from almost bankrupt to potentially most valuable company on Earth runs through 3 things: a reusable rocket called the Falcon 9, a satellite internet network called Starlink, and most recently, most controversially, a merger with an AI company called xAI. SpaceX acquired xAI in February of this year, with Musk stating the goal was to create the most ambitious vertically integrated innovation engine on and off Earth. And that acquisition is where things get complicated. Here's what SpaceX actually is as a business, stripped of the mythology. The company reported over $18.5 billion in 2025 revenue. That's real money from real customers. The 2 core engines are rocket launches and Starlink satellite internet. The launch business, Falcon 9 and a still-in-development Starship, dominates the global launch market. Starlink, meanwhile, has become what analysts are calling a genuine cash cow, beaming internet to ships, planes, remote farms, and conflict zones across the planet. Bloomberg analysts expect that combined revenue from the launch business and Starlink will approach $20 billion by 2026. That's an impressive business. That is, objectively, a great company. But here's the problem. A great company worth $20 billion in revenue being priced at $2 trillion means you're paying 100 times for every dollar of sales. SpaceX is targeting a price-to-sales ratio of 75 times its forward expected revenue, a level that would dwarf even NVIDIA at its AI peak, making it by far the most expensively priced member of the trillion-dollar club. NVIDIA, the company that single-handedly powered the AI revolution, only traded at 40 to 45 times revenue at its absolute frothiest. So, either SpaceX is the most extraordinary company ever created, or someone is cooking the valuation with a blowtorch. The answer, if you look closely, is that SpaceX isn't really being sold as a rocket company anymore. It's being sold as something much bigger and much harder to value. One Wall Street analyst outlined 4 pillars justifying the valuation: the launch business itself, Starlink as a global internet service provider that controls the flow of compute, either on the ground or in orbit; Grok, xAI's AI model trained on real-time data from the X platform; and finally, a joint venture called Terafab, a semiconductor fabrication facility designed to produce more compute capacity per year than the entire current worldwide total combined. I'll say that again. More compute than the entire world combined. That's the pitch. Seen through that lens, SpaceX isn't a rocket company. It's a vertically integrated AI plus infrastructure plus defense plus communications empire that happens to also make rockets. And if you believe that story, really believe it, then $2 trillion starts to feel less insane. If you're skeptical, it starts to look like the greatest piece of narrative packaging since WeWork called itself a tech company. Here's how it looks from both sides. A traditional space company, say United Launch Alliance, gets valued on launch contracts and government relationships. Straightforward. SpaceX, under this new framing, gets valued like a future AI infrastructure monopolist, controlling everything from the chips to the satellites to the data flowing through them. That's a completely different conversation. And that difference between rocket company and AI infrastructure monopolist might be worth $1 trillion, or it might be worth 0. There's a catch. Actually, there are several catches. While SpaceX's revenue exceeded $18.5 billion last year, net losses approached $5 billion, primarily due to the xAI acquisition. xAI burned through $7.8 billion in expenses in the first 9 months of 2025, averaging $28 million per day, while quarterly losses continued to widen. Trading key: $28 million per day. That's the AI engine supposedly powering this $2 trillion valuation, and it's currently on fire in the financial sense. Musk himself, in a move that's very on-brand, dismissed early reports about the IPO on X, calling them unreliable. He has previously downplayed inflated valuations, once calling an $800 billion figure for SpaceX too high. The man asking you to pay $2 trillion for his company once said $800 billion was too much. Make of that what you will. And there's a structural concern that analysts keep circling. Some question whether the unusual combination of a rocket company and an AI company can truly generate synergy. The concept of space data centers, while theoretically compelling, remains a long way from commercialization. There's also the regulatory shadow of Musk simultaneously leading SpaceX, Tesla, and xAI, 3 massive companies with overlapping interests, government contracts, and antitrust exposure. SpaceX is allocating 30% of its IPO shares to retail investors. That's 3 to 6 times the norm. On paper, that sounds generous, democratizing access, letting regular people own a piece of the future. But read the other way. It suggests that the institutional smart money may be quietly hesitant at this price. Retail investors, famously more susceptible to hype, are being invited to fill that gap. None of this is happening in a vacuum. The timing of SpaceX's IPO filing is noteworthy, occurring just 1 day after OpenAI closed a record $122 billion funding round that saw its valuation soar to $852 billion. SpaceX aims to front-run its IPO to create a capital siphon effect against AI rivals like OpenAI and Anthropic. This isn't just a business decision. It's a race. Whoever gets to public markets first, while AI hype is still at peak temperature, wins the narrative, wins the valuation, wins the capital. SpaceX filed confidentially with the SEC on April 1st, targeting a late May prospectus and early June roadshow. And the company's valuation is roughly 5 times what it was just 9 months ago. 5 times in 9 months. That's not organic growth. That's a story catching fire. In markets, timing is everything. Facebook went public at exactly the wrong moment in 2012 and cratered for a year. Airbnb timed its 2020 IPO perfectly, listing during a recovery rally and doubling on day one. If SpaceX hits the market before AI fever breaks, before OpenAI goes public, before investors start asking harder questions, they could lock in a valuation that would be impossible 6 months later. That's not cynicism. That's strategy. And honestly, it's kind of genius. Prediction markets give a 40% probability that the final valuation lands between $1.5 and $2 trillion, and a 27% chance it comes in between 2 and 2.5 trillion. The AI bubble question, whether the hype driving all of this actually survive, has only a 19% chance of bursting significantly by December 31st, according to those same markets. For what it's worth, there's a real business underneath all the noise. Starlink is profitable and growing. The launch business is genuinely dominant. The Starship rocket, if it ever reaches full operational status, would reduce the cost of getting payload to orbit by another order of magnitude, unlocking markets that don't exist yet. The bones of this company are extraordinary. The question is whether you're being asked to pay $2 trillion for the bones or for the dream that gets built on top of them. Mega-IPOs don't have a great track record of holding their value in the near term. Uber, Lyft, Rivian, WeWork, the list of transformational companies that face-planted after going public is long enough to be its own cautionary tale. That's not a prediction, but it is history. So here's the question I keep coming back to. Is SpaceX the next $2 trillion giant, the rare company that genuinely earns a valuation the market gives it on faith? Or are we watching a masterclass in timing the hype cycle, where a legitimate business gets dressed up in AI language and sold at the peak of a narrative bubble? Maybe both things can be true. Maybe SpaceX is a great company and an overpriced IPO simultaneously. What I know for certain is this: the way we value companies is changing. The line between a rocket company and an AI company is blurring in ways that accounting was never designed to handle. And whoever figures out how to price the future of intelligence, in orbit, on the ground, or somewhere in between, will define what the next decade of markets actually looks like. Next time, we're going to look at what happens after the IPO, the companies that survived their own hype, and the ones that never recovered from it. Because the launch, as SpaceX knows better than anyone, is only half the mission. Getting back down in one piece is the hard part.